Hi, I'm Rick Barnett, founder and CEO of Barnett Financial Tax, and I wanted to talk this month about the formidable partnership between financial planning and tax planning and tax returns. We focus specifically on retirement planning that revolves around your income plan while driving down taxes to the lowest possible level. And today we're going to just have a brief discussion about how we can take that partnership, put it together of the financial planning, wealth management, tax planning together so that we can get the greatest amount of income during our lifetime and pay the least amount of tax allowed by law. It's really important to understand that having one firm do both the planning, investments, as well as the taxes together is so important. The reason for this is if you have separate firms giving you advice, it's like having different doctors give you advice about your physical condition. So we bring this marriage together so that we're all on the same page and have a great understanding of where you're at today and where you're going to be in the future as it relates to your assets and your investments and your income, as well as the overall tax perspective of where things are at and where you'll be going forward. So it's really important to understand that this marriage is critical in having the best possible outcomes for you. We never want to leave money laying on the table. And if you've been working with an advisory firm or even maybe doing some stuff on your own, and you're not giving the consideration of how investments and income and everything you're doing financially impacts your taxes, then you're probably leaving a lot on the table. As a matter of fact, if you're getting investment advice and you don't know what the tax implications are going to be from that advice, for example, if someone said you should buy a certain investment or sell a certain investment, the number one question you should be asking is, how will that impact my taxes? Because a good portion of the gains potentially could even be lost as a result of not paying attention to the tax implications. So there's this great synergy, and we really want to expose the opportunities that exist in putting this together so that all things are working harmoniously for you, not just your overall plan and going into retirement, producing that great income, as well as keeping the taxes low, which happens to be our greatest expense. So if we can drive down taxes to the lowest possible level allowed by law, then we're actually just increasing our income as a result of that tax reduction strategy. One of the big differences that I want you to understand between tax planning and tax preparation is that tax preparation typically is where, it comes that time of year, you have to get your taxes done. You're waiting for all of your documents to come in the mail, which generally are there by January 30th. And then you're dropping those off for someone, or you're scanning and emailing the documents so that the tax preparer can prepare the returns. But what I'm specifically talking about is tax planning. Not to say that tax preparation isn't important, because it is very important, but to have your tax planner, who is the same person as your tax preparer, is critical, because all the plans you're making to reduce taxes need to be put together into the tax return so that you have the greatest outcomes. But the planning has to happen first. So we're talking about that throughout the year, making good decisions about taxes on the planning side. So when it comes time to prepare the returns, we're getting the greatest possible outcomes. And that marriage and that synergy is so important in working together for you and your family.